Hi everyone, Drini here, and welcome to my channel. So, if you watched my video yesterday, there is a bearish case because if you look at the current price action, it's starting to form what we call an ascending wedge. So it will go up here, come down, and then come back up. But as it goes up, look at the price ranges. It's starting to narrow and narrow. Normally, this is a bearish pattern, but again, only if you start breaking down from this trend line. But if you start breaking down and go here, then you know why. It's because we were forming this wedge and we would need some time to consolidate below before we continue moving forward. When we start to see ascending wedges, it's very similar to the broadening descending channel that I was talking about before. So the technical target for the ascending wedge tends to be the price where the wedge is its lowest. So it's around here. At around 55 cents. I've been thinking about this for quite some time now. I swear to God, the bears are watching my channel. Unfortunately, our bearish scenario played out here where I did say yesterday that we were forming an ascending wedge right here. And when you fall off of that wedge, you have a technical target of around 55 cents, or basically the area where the wedge is at its lowest point. Now you probably have two questions moving forward, right? One is this the bottom of this particular sequence, or will we go down a little bit lower? One of the things that I recently observed is when you look at the hourly time frame, we formed a 5-wave Elliott wave to the upside. It's harder to see on a 4-hourly time frame, but if you zoom into the 1 hour, then we can actually map out the waves. So this is wave 1, this is wave 2, this is wave 3. So you have a massive impulse wave here, which led to a correction. And the final wave ended up at around 68 cents. Now again, like I mentioned to everyone in the channel or who's listening, when you have a 5-wave Elliott wave theory here, it is immediately followed by an ABC correction. So now you have an A, B, and a C correction. Similar to our discussions before, how do we know that we're out of this C wave? It's kind of hard to tell the bottom, but here are a few things that we know so far from the charts. So I know I said that timing the bottom is impossible, but we can at least map out the scenarios at play here. So throughout the past year, where I've been covering a lot of crypto technical analysis so far, one thing that I observed is after 5-wave Elliott waves, there is a way to sort of estimate where the potential bottom is. It doesn't always play out, but at least it gives the maximum value that we can go to before we can confidently say that we are ready to move forward. The way I do that is after a wave 5 right here, an A correction typically would break the structure of the EMAs. So you have the 21 EMA here, you have the 55 EMA. If you notice, the A wave broke right through that structure before rallying to the B wave. You can draw a Fibonacci retracement tool here, but you draw it in reverse. So this is the 0 and this is the 1. And from what I've seen so far, the maximum retracement for an ABC correction tends to be the 1618. So whatever structure is formed by the 5th wave and the A wave, if you draw a Fibonacci retracement that's reverse, it sort of always leads to the 1618. That tends to be the maximum value. So right now, the 1618 for this structure is around 53 cents. But if you notice, it doesn't always play out. So if we reverse course right here, the price action found support at 1414 and it has since come back to the 1272 area. So a worst case scenario that can potentially happen is if, let's say, you still have further breakdowns, so it will look like this. You will break down here, eventually reach the 1618, maybe bounce for a little while before continuation moving forward. So let's see how it goes. One thing about the C waves, as I mentioned before, it's really impossible to track because one, it's different for every crypto. So while I have a system to identify a break-in structure, and when I do a Fibonacci retracement and aim for the 1618 as the lowest potential value that it could reach before bouncing off, it doesn't always happen. So the best way that we can do here is really to just map out the scenarios. If we bounce off the 1414, which we have done so far, then good. But otherwise, if we go down lower, so be it. This can be a really good buying opportunity if we get there, because 53 cents is the low of this structure, and we bounce off from here. And that's it. Please like and subscribe. Hit the notification bell. Do leave a comment. Let me know what you think. And I'll see you next time. Bye-bye.